Hello traders, Gary Wagner here, just about 10:15 in Honolulu, 4:15 in New York. It is Monday, October 24th, 2016, and this is the Daily Report for Gold and Silver. We do have the precious metals off slightly, modest losses today. Off about $3 in gold. We're looking at COMEX futures at $1264.60, the low $1260 and the high $1272, about a $12 range, and about a 0.25% drop when we look at COMEX. Spot, roughly the same price, net change a little different, $1264 down about $1.60, lows and highs pretty much identical, which really shows you how much spot and December COMEX have now come into alignment. When we look at silver, silver is trading higher this morning, and that is trading up about 1/3% at $17.58, the low 47 and the high 88. And lastly, we will look at COMEX. COMEX trading up roughly 0.5% on the day at 17.59, low 46 and the high 89. Let's take a look at our first chart. So traders, we continue to see what I will call a choppy market, and the definition to me, of course, of a choppy market is really alternating candle color, in which we have alternating days going from highs to low. Now, we've gotten that over the last 3 days. That, of course, follows a pretty nice clip up that we've had, and it has kept us really above these lows that were created last week, and that's what's important to me. Now, I would have liked to seen follow through today, and the fact that on Friday we closed just roughly at this particular area that we're looking at, which would be about 1266. Now, we're down at 1264, so we're not that far away from it. But as I said on Friday, what I really would like to see over the next couple of days is this particular line in the sand, so to speak, because we have an absolute line in the sand, and we talked about that. That's between 1238 and 1248. It is a fib harmonics, and we've really stayed out of that much. So I really do believe that we are forming a base. The base, of course, is off of these lows right here. However, we're not moving up with any kind of real intensity yet, but we are going to higher ground in terms of the range today, increase in range, but then we had that contracted range on Friday, and today's range is still only a $12 range from high to low. So traders, I have converted the bar chart that we were just looking at into a Japanese average chart. Not a standard candlestick, but an average chart. And the difference, of course, between the average chart and a Japanese candlestick chart is how they create their true opens and closes of the day. Whereas a candlestick has a true open and true close, meaning the low on a green candle, the low that you see is the true open of the day, and the high that you see is going to be the true close of the day on a candlestick chart. On a average chart, it's different, because if you take a look, here's our open, and it really fixes it on the midpoint of the prior trading range. And so as you look at any candle, if you take, for example, this candle, the midpoint is right there, and of course, let me change colors on this, I apologize. But then you get your midpoint right here. And when you look, here's the midpoint for this candle, and that becomes the open, and so on. And so what it tends to do is to smooth out activity when we look at it. Now, interestingly enough, what we're getting right now, and you almost can't see it, let me in fact just alleviate one line. And that is what I have just done. I didn't alleviate, I just made it much, much thinner, and that is this 68% retracement line at 1266. Because as you can see, on the Heikin Ashi, on the average charts, we are closing pretty much at the average, pretty much dead on at the average. So even with the small percentage of drawdown, it is actually holding this particular line. And as I said last week, I really would like to see this market clip up and have this area of 1266, rather than being any kind of a resistance area, definitely build a base and a support, which will move the support line up one notch, because it's currently at 1240. And traders, lastly in gold, I converted the Heikin Ashi to a standard candlestick, just so you could get a real clear indication. The one thing you see is you've got small body candles, but certainly not dojis, and we're not really gleaning any kind of significant information from the candlesticks because the range has been so subdued over the last couple of trading days. So traders, the next chart that I do want to look at are going to be a couple of quick silver charts. This first one, of course, is a weekly chart, and as you know, I have really been on record stating that unless we break above this now resistance line, which is simply formed from drawing a line from these lows here, here, and here, and then extending it up, we definitively broke through this market. Of course, this is a weekly chart. We broke through this a couple of weeks ago, and we've been absolutely trading underneath it now. We have had quite a range for the day. And so you see that the high came close to it. It's flirted with the high for the last couple of weeks. But I really want to see this market break above this before we signal a buy in the market and show some real strength in silver. This has been Gary Wagner wishing you, as always, good trading. Maintain your current long position in gold and maintain your current stop. We'll talk to you tomorrow for another daily update and review. Bye-bye.